I saved hundreds of dollars on taxes this year just by doing this one simple thing, and that is to write off my personal office space in my house. With COVID-19, I bet a lot of us have spent time working from home. So if you have an office space that you use in your house just for work, stick around. I'm going to teach you exactly how you can write off that office space on your taxes and save a lot of money. But before we do that, my office needs an upgrade. Let's get to work. Oh man, that looks so much better. So now let's talk about the one thing you can do to save hundreds of dollars on taxes. As a CPA, I am 100% for taking as much taxes off as we possibly can because I don't want to give the government my money anyways because personally, they don't really know how to manage it very well. I do this because do I want to pay taxes?
No!
All right, so let's jump right in. To write off your home office or the room in your house that you're using as a home office, to be able to claim any type of expense, you first have to pass a few tests. These tests are really simple. They are the regular and exclusive tests. So regular meaning that you are regularly using your office for business. So you can't just use it once a year and all of a sudden take a huge exemption. But if you are in your home office regularly and you are using it for business, then you pass that test. The next one is the exclusive test, and that means that you use that area exclusively for work. So you can't have a commingled area. You can't have a room that you use as a workout room, but also as your home office, because then the IRS is going to come back and be like, oh, well, you're kind of using it for personal, but also using it for business. It has to be exclusively for business. All right, now that you've passed those two tests, it is time to figure out how you actually write it off. So there are two ways to write off a home office space. So there is the regular way that you can depreciate that portion of your house and claim any expenses associated with it as well. So I'm gonna break that down and I'm gonna use my office space as an example. So for example, I have a 12-foot by 12-foot office. I use it for YouTube, I use it for my real estate business, and I use it strictly for business. So I pass those tests and I'm gonna write off this office space to save myself money on taxes. To be able to do it on the regular method, it's gonna take a lot of calculation. So the first thing that you're gonna have to do is you're going to have to determine the value of your house versus the value of the land that the house sits on. The best way to do this that I've seen, and you're gonna have to be able to prove to the IRS that you are doing this. You can't just say, hey, well, my house is worth, $500,000 and the land is useless. It is not worth anything because that just won't fly. So the best way to do this is to go to your property tax. Notice that you get every single year. So it'll tell you a taxable value of your house and the land, and that'll give you a good ratio. So I did just that. I looked up my property tax. I just barely got the notice for 2020, and it says that my value on my house is $156,000 when the total value of the house plus the land is $175,000. So that means my house is 89.4% of the whole value of the entire property. Now, you do not use the $156,000 as the write-off amount for your house because most likely you paid a different amount than what is actually shown on your property tax. So in my example, I bought my house for $223,000. So if you take that ratio of 89.4%, apply it to the $223,000 that I bought my house for, then I get a depreciable amount for my house of $199,400. Now that is if I was going to depreciate the entire house, but I can't depreciate the entire house because the entire house is not used for business. I can only depreciate the portion that is used regularly and exclusively for business. Now I'll have to do another calculation. So my office is 12 by 12, so it's 144 feet. My entire house is 2,200 square feet, so I take 144 divided by 2,200, and that will give me the percentage ratio that I can take on depreciation. So 144 divided by 2,200 gets me 6.54%, so I can take 6.54% of $199,400. So that shakes out to be right around $13,000, but I have to take that $13,000, that's my amount that I can depreciate, I have to take that over 39 years. The IRS wants you to take that expense over a long period of time because your house is a long living asset. So that is how you get the depreciation amount. So you can take that $13,000 divided by 39. That is the amount of expense you can claim in that year for depreciation. Now there are other expenses that you have in your business as well. If you have any direct expenses, you can just write off the entire thing. If you have an indirect expense or something that, pays for your whole house, you can only take a portion of it. So you take that same ratio. So this could be for like utilities, like electricity. There's no way that I can just straight up calculate exactly what's going into my one office space. So I get to take a portion of that. So I take my $13,000 divided by 39 years. I get that portion of the expense. And now I'm going to add up all of my utilities. So I pay the city that I live in around $1,200 a year. I have internet of around $600 a year. I have electricity of right around $1,200 a year. And then I have gas of about $1,000 a year. So you add up all those annual expenses, that is $4,000 in utilities, and I can only take 144 divided by 2,200, so I can only take 6.54% of that $4,000 in an expense on my taxes. So my depreciation shakes out to be right around $334, and then my utilities is $261. I can also take an expense for home insurance, so $600 times 6.54%, so right around $39. You can also write off property tax and mortgage interest, but it's only to the extent that it's above the standard deduction. So if you are claiming the standard deduction, most likely you will not be able to take these expenses in addition. So make sure you understand that. Go and read the tax law before you go and try and claim this expense as a business expense. All right, so the math from my depreciation, from my utilities, from my homeowner's insurance, I can write off $634. Now that's the complicated way to do it. So if you want to do all those calculations, go for it. But the IRS has also made a simplified version where you can just take the square footage of your office, multiply it by $5, and that's the amount that you get to write off. So in my example, I have a 144 square foot office. I can multiply it by $5. I can write off $720 each year, which in my example is better because I actually get a higher deduction and I don't have to do near as much work, even though I have already done it because I'm a nerd. I don't know, but it is easy. It's simplified. I will say that there are instances where it may be better to calculate your expense rather than just doing the simplified version because real estate prices in some areas may be a lot higher, and that can definitely impact the amount of money that you can depreciate and be able to take on your taxes. Another cool thing about the simplified version is you don't have a thing called depreciation recapture. So when you depreciate an asset on your taxes, then that lowers what's called your basis in your asset. So for example, if you have a $100,000 house and you depreciate it down to $50,000 and then you sold it for $150,000, you're going to have a $100,000 gain because you claimed $50,000 in deductions earlier. And so the IRS is going to make you recapture that $50,000 and then also get the $50,000 to get up to $150,000. as taxable income. So you have depreciation recapture. And that's how it would also happen if you depreciate your home office. So if I take, over the next 39 years, if I take $13,000 worth of expenses and I sell my house, I will have to reclaim that $13,000 worth of income. But on the simplified version, you don't have depreciation recapture. You just take the expense, and if you sell your house, you don't have to worry about reclaiming that gain. It is just a write-off. So that part's really cool about the simplified version. All right, the big thing is you just got to do the math, figure out which one's best for you. Take advantage of this because it is a good way to save money. And I've always told you this. There are two ways to make more money. You can either increase your income or decrease your expenses. And I'm all for decreasing my expenses, especially when it comes to taxes. If you haven't already, consider subscribing. I'm going to keep doing videos of how to save money, how to make more money, how to make passive income. Thank you. We'll catch you guys next time. And yes, these are sweat stains. I do know how to work, even though most of the time I'm just sitting on Excel as an accountant. I spend a lot of time on that. But I have picked up a few tricks by remodeling my brother-in-law's house. So we are going to put tongue and groove up this wall, and we're going to get to work.